The chairman of the Federal Reserve is warning we're probably in for a bumpy road ahead.
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risks of higher unemployment and higher inflation have risen, but they haven't materialized yet. They're not in the data yet. So that tells me more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place. And the right thing to do is await further clarity.
And while they wait for that clarity, today the Fed decided to keep interest rates steady at 4.25% to 4.5%. So what's causing all this uncertainty and this wait-and-see approach? It's one thing and one thing only.
The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. Where tariffs are going to land, given the scope and scale of the tariffs.
In case you didn't get that, in the eyes of the Federal Reserve, President Trump's tariff policy is throwing a huge wrench into the progress of the U.S. economy. Why? As Chairman Powell said, and as I've been reporting since last year, tariffs are generally inflationary. Tariffs increase the cost on the stuff we buy, which then raises overall inflation. Then because all that stuff is so expensive, companies are forced to start downsizing, which then leads to people being fired and therefore increasing unemployment. But the key thing is, while these things may be starting to happen right now, we aren't seeing those things show up in the data right now. And that's because of two things. One, because the U.S. economy has proved, especially over the last year or so, to be really strong and resilient. And two, because it takes time for tariffs to seep into the economy. President Trump just rolled out this tariff policy a month ago. And as I told you in this video, you don't feel the effects of tariffs immediately. So they don't show up in the data immediately. But that doesn't mean the impacts aren't coming.
There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is.
The monetary policy President Trump wants is for the Fed to lower interest rates right now. Obviously, again today, the Fed said no. Chairman Powell says it's not wise to lower interest rates yet because the tariffs have not made their way into the data yet. And on top of that, President Trump keeps changing his mind about the tariff policy. But Powell was very clear that he doesn't really care what pressure Trump puts on him or the Fed. As the Fed sees it, the only thing they care about is following through on their employment and inflation goals.
So then how does President Trump calling on you personally as well as the Federal Reserve to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.